Okay. Hi, friends. Going live. It's night 2 of home buying week. I don't think that anybody's here yet, and that's okay. Um, Welcome. We're going to hang out for a few minutes here. Karen, just a note, I am seeing the same thing we saw with Instagram Live from last night, that we're having trouble streaming to your destination, as usual. So anyway, those that are starting to watch us, welcome. If you are watching tonight on Instagram Live was working okay last night, but when we tested it, we thought that we might have a problem with our split screen when we bring our guests on. So if you're finding, as you watch tonight, that it doesn't look very good, switch over to Facebook. It's on my personal page if we're friends there, or you can find it on our business page, which is Scott Curcio. You can just search Scott Curcio Real Estate and it will boop, boop, pop right up for you. So we are kicking off night 2 of home buying week. I'm talking about home loans, everything from getting pre-approved to interest rates to neighborhood specialty programs, what have you. We've got 3 of our top lenders that are going to be joining us in different points to discuss some of their key tips and points tonight. And we'll wait a few minutes here and let folks get settled. So if you're joining us tonight, make sure to comment. I can see comments from YouTube and Facebook Live. I cannot see Instagram Live comments. Unfortunately, you know, the fact that we're able to tech this all and do it across multiple platforms is very exciting and still surprising me, quite honestly. So welcome. Thanks for spending time with us. I know we're just starting to get a couple people watching. Hopefully that'll move along as we go here tonight. But this will be recorded, so we'll be able to reference back to it later and have a lot of knowledge. And right now I'm sitting live and waiting for some more folks to come back and join us. Anyway, giving you guys a few more minutes. If you're joining us right now, thanks everybody for tuning in. And oh, good. What's up, Sean Carpenter? Thanks for checking in with us here. Anyway, anybody that's tuning in tonight, it's night 2 of Home Buyers Week, and we are going to be talking about home loans and tips. We've got 3 of our top lenders that are going to each join us and give us a couple of nuggets of wisdom. This is going on all week. Tomorrow night, we're talking about vacation and second homes. And then Saturday morning, it's Coffee with Curcio, 10 a.m. Central. We will be just having a broad Q&A session and chat as we move through the end of the week. Next week will be Home Sellers Week, so please watch out for that. We're going to do the same thing, but for those folks that are thinking about selling or divesting from a property. And Sean, you're very welcome. Remember to like, comment, and share tonight. I can see comments from Facebook and from YouTube Live. Instagram has been a little wonky, but I think we will hopefully get through tonight. So special thanks to my friend Rachel Potter, who helped us get our StreamYard stream up, and for Karen Taronis for getting all the back-end support done so that we could bring you these fantastic events this week. It is, let's see, it's 7:04. So we'll give it another minute or two, let a couple more people come on, and then I will bring on our first guest of the evening. And we'll start cooking and talking about stuff here as we do. So that's about it. So see what we're doing here on my screen. Forgive me. Sometimes I gotta look at the different screen here, y'all. So thanks for all that are joining me live here. Let's see what else. It is 7:04, almost 7:05, y'all, and then we're gonna jump into our content. So if you are joining us, I'm Scott Curcio from Beard & Warner Real Estate, which you probably know if you are here. And members of my team will be on hand tonight too and watching and chiming in. And we've got 3 of our top lenders that are going to take us through some of the what we call our 5 tips to get the best home loan possible. Sean, there's going to be cooking. No, it's just, could you imagine? Maybe that's a show though, The Cooking Realtor. Ooh, that could be fun. We should do that. So let's see, it is 7:05. So I'm going to jump ahead and I'm going to invite our first guest of the evening, Ron Haddad with Key Mortgage, to join us. So hang on a second. Let's Guys, this is where it gets exciting. Adding people to the screen. Oh, it worked. Look at that. Technology is very exciting. Hello.
How you doing, Scott?
Good. Now I can hear you.
Great.
Good,
Thanks for having me.
Welcome, welcome. So first, why don't you just introduce yourself really briefly to everybody, and then we are going to just dive into our content tonight. I know you've got a couple of really important tips for especially people starting out their home search. So
thank you. Yeah, thanks so much. Ron Haddad. I am Vice President of Residential Mortgage Lending with Key Mortgage Services. We're a Chicago-based mortgage lender. I've got coming up on 20 years of experience. And I focus on purchase financing, and I work well from the first-time home buyer to the seasoned investor.
Yeah.
So again, thank you for including me and inviting me on this broadcast. Thank you.
You're welcome. I didn't realize I've been mispronouncing your name for a very long time, your last name. So there's that. Well, we've all learned something today. All right. So I know one of the things you were talking about is really the importance of especially with a market like we are having that's so speedy, is starting your financing process early, and that a lot of people really almost started too late. So take us through that. I know that was one of your main points for tonight.
Yeah, to get pre-approved early and to ask questions, I think is crucial, so that one can understand what their financing options are and that there are no hurdles when the time comes to really make a move.
Yeah.
Especially this market. I mean, this market right now is, you got to act quick, and if you don't, you may lose out on an opportunity. So, why wait to get pre-approved? Learn early on what your affordability allows. And I like to approach, especially with first-time home buyers, the cost approach. And to simplify, it's, when you sell something, it's about the net, how much I'm going to get back. When you buy something, it's about the cost. So to simplify, how much can I afford? What's my cost per month in the form of a payment? And how much do I need to buy a home? What's my all-in amount? What's my cost? And if we start from there, it just makes it easier when the time comes that you do need to move forward with an offer.
Got it. Awesome. Yep. What else are you finding that people should know, or just what are you seeing too in terms of just the market right now, and maybe some things that people wouldn't know or wouldn't even know to ask?
Yeah, I like to mention to customers, it's not really, it's a consultation. It's not an interrogation. I mean, the pre-approval is supposed to be this learning experience where you can really explore what you can do, not just in the form of that payment or that cost, but also, what your options are. There's no one size fits all. There's multiple products and programs, down payment assistance programs. I mean, it's a situation too where the consultant, which is the loan officer, a good loan officer, they'll ask questions about your life needs and wants. And then sometimes, dare I say, the lowest interest rate may not necessarily be the best program. There are first-time buyer programs that have got significant discounts to rates, but then down payment assistance programs that may have higher rates, but you can get thousands of dollars. So keep an open mind. It's a consultation where you just want to be able to share what your needs are and what your wants are. And the loan officer, they'll be able to go ahead and, share with you back what options you have to consider.
I love that. The lowest rate may not be the best program. And I think a lot of times, I mean, we see that a lot honestly with FHA, where people will come in and say, oh, the low down payment. And you're like, yeah, but is it going to be the cheapest payment when you consider in your PMI or MI payments? So.
You nailed that. I mean, and that's one, there's first-time buyer programs that offer these discounts, but only if you have less than 20% down. Some cases, putting down 19.99% may actually save you thousands of dollars, but you deal with PMI, which is a cost for maybe 12 months. I mean, again, it's being creative and working with a lender that knows how to approach every situation.
Got it. So if you guys I'm going to pause for a second. So anybody that's just joining us right now, thanks for tuning in to our second night for Home Buying Week 2021. Ron from Key Mortgage has joined us and talking through some of his main tips. We've got two other lenders on deck that'll be with us a little bit later as we go through and give you guys, if you're tuning in tonight, a lot of hopefully great insight and advice on setting yourself up for success. We are in a very, very fast moving market this year. And what we've seen is that the buyers that get themselves up front, ready and positioned and ready to go are the ones that win, plain and simple. So that's what this week is about, is how you can be the person that actually goes under contract with a house and buys a house in 2021 versus be the person that keeps losing, keeps missing. So hopefully these tips tonight will really get you there. Please make sure to like and comment and share tonight. We don't see Instagram comments. We're trying to have somebody monitor that, but I do see Facebook and YouTube comments coming through. So if you're watching on those platforms, go ahead and comment. So anyway, just a little interlude there because I see that we picked up some new people watching and I want to make sure that they knew the lay of the land. So anyway, Ron, generally, what else are you seeing this year in terms of, I'm getting a lot of questions, and I'm going to ask everybody tonight. A big question I'm getting is like, are the rates going to go up? And that is something that I think is percolated. They started going up a little bit and everybody started freaking out. I mean, they don't seem that like they're that high. So I guess what's your take on that? So.
Well, yes. And I love sharing the opinion out. There's no crystal ball, but before I did this, I was in Treasury futures, specifically in the 10-year. So I can kind of gauge it a little bit better, I think, than most.
Yeah.
Right now we're in this zone where it's a correction period, and rates have actually hit kind of a ceiling and a come back down. But I think it's temporary. I think we're in a great spot right now. I think the year is going to end closer to 4%. We're right now for 2.875 or 3%. This is for the 30-year fixed.
Yeah.
So I think they're going to ultimately move higher the deeper that we get into the summer. And right now is a great time to pick up a little bit lower of an interest rate, something that wasn't around just 3 or 4 weeks ago.
Yeah. It does seem like it's a moving target. Do you have, we always find that people seem to always try and play the rate game, and maybe talk about that. That's what I'm going to ask everybody tonight too, is like, what do they see with it? Because I think that's something that always comes into play. Everyone's like, oh, it's again, shopping for that best rate. And when should I lock? And oh my gosh, it went up 0.11% or something. So
yeah, no, I get it. And again, that's what everyone wants. We want the lowest. We want the best. We want the lowest price. We want the best interest rate. We want the lowest fees. And you know what? We deserve it, right? Oh, come on. But trying to catch a dropping knife or trying to gauge the market when there's so much going on, it's very difficult to do. You can't pick a bottom. You can you then can pick a range. And like I mentioned, right now we're in a really good range. And if it goes up or down 1/8%, I like to translate that in an amount. Yeah. So for every $100,000 in loan amount, for every 1/8%, it's only $6 a month. Or 1/4% is $12 a month. So if someone is financing $200,000 and rates go up or down by quarter, that's $24 a month. It's a pizza. So I mean, it's one of those things where if you approach it from affordability and you feel comfortable about the payment and the range of the interest rates, then you can't make a bad decision.
That's good. That's good knowledge to hear. So. Well, good. Well, anything else you wanna chime in on tonight, or anything else you think we should talk about or know about what's going on in the lending world or the housing market in general?
Yeah. Well, again, I think affordability has never been this good. I mean, rates were a little bit lower last year, but I mean, it's phenomenal. So the buying or borrowing power just really couldn't be much better than it is right now. And it's a great time to consider financing options to buy a new home, whether it's a first home or vacation home or even an investment property. So I welcome any questions anyone has.
Great, and we'll put everyone's contact information in the chat here tonight. So
thanks.
Great. Well, Ron, thank you so much. Appreciate it. I'm gonna send you back to the green room, the virtual green room, and take back over the screen and kind of summarize for those that have just joined us what we've just kind of come through. So thanks for joining us tonight. Appreciate it.
Thanks again, Scott. Thanks for having me.
Bye. All right. So some really good topics there and notes to start us off. If you guys are just joining us, it is night number 2 of our 4-part home buying week series here at Scott Curcio Residential at Baird & Warner Real Estate. We last night kicked things off talking about how to essentially win multiple offers and write the best offer to get your purchase contract accepted by a seller. And we were lucky enough to be joined by my friends Julie Busby from Compass and Josh Weinberg from Keller Williams One Chicago, who all three of us combined do a lot of business and work together a lot and collaborate a lot. So we thought, what better way than to team up and give you guys some real quick hits. So if you missed that last night, you can go to my Facebook business page. If you just search facebook.com/Scott Curcio Real Estate, it will take you right there. And I do believe we have the recording posted so you can watch it. It's an hour, so it's a lot, but there's a lot of really good nuggets in there. And at points we summarize them, so you don't have to watch the whole thing. But it was a really great night, kind of like tonight's shaping up to be. So we just had Ron Haddad from Key Mortgage, one of our top lenders that we work with, and sharing a couple points, specifically the importance of getting yourself pre-approved early. And we have this happen a lot. I'll give you a little story, even just this past week. I always tell my clients, get yourself set, because what happens when you start going to open houses, because you're just getting started, and then you walk in and you go, I want to buy that house. And that's exactly what happened to clients of mine this Sunday. And they called me and they said, we did what you said not to do. We went to open houses, we fell in love, and now we want to buy it. There you go. And that's what happened. So, and it was also a property that just listed and it was competitive. So you got to go. You got to be ready to go. There's no harm in getting that pre-approval letter set. Because if you go and see something you want and it's a Sunday and they're doing a best and final, they've got offers. If you don't have that pre-approval letter, you're not going to win, my friends. So that's what we're trying to drive home tonight, that if you are wanting to get in the market, be in the market, like get yourself approved, talk to a lender, even if you think it's 3 months, 6 months away. One of the things we're going to hear from Limit Later Night, one of our guests, is, making sure that your credit's in good standing. Do you need to do any credit repair? Did you miss a payment? Do you have something that maybe is auto paying that you don't know is auto paying? All of these things have happened to our clients. We're busy. We lose track sometimes of all of those different financial pieces of our profile. So some of the things we're going through tonight. The other thing that Ron shared with us, which I really loved, was we're talking a little bit about loan programs, and that the lowest rate may not be the best loan program. So you want to make sure to look at it as a whole, right? Like maybe you can put less money down and to get a better interest rate, but maybe your PMI costs are going to take that payment up a little bit. And we also talked a little bit about where we see the rates going. And Ron's thought was that we might be closer to 4% by the end of the year. So now everyone pause to freak out. Okay, we're done. Affordability is at one of its best points, so don't freak out over that. And Ron gave us some really good points, and I'm going to put this in the chat window when we start going with our next guest, and I have a minute where I don't have to talk, and I can type a little bit. That, first, you can't pick a bottom to a market. Can't pick the top either. That's always a hard one. But if you're talking about financing $100,000, if we see 1/8 of a point go up, you're talking about an additional $6 a month. A 1/4 point raise is roughly $12 a month. So goes up a 1/2 point. That's one less pizza a month. A good pizza, by the way, because a $24 pizza better taste really damn good. Anyway, so those are some of the things we've been seeing tonight so far. Our next guest that's going to join us is, who I'll bring on in just a few minutes because he's sitting in the green room, is Justin Lopatin from Guaranteed Rate. Also one of our lenders that we do a lot of work with. And if you are just tuning in and joining us, I don't think I've seen any new people chime in just yet. Keep in mind, we've got 2 more events with Home Buying Week coming up this week. We have tomorrow night when we're going to be talking about vacation and second homes. And then we will also on Saturday morning just be doing a general Q&A session. So any of those thoughts or questions or comments about home buying that you've been thinking about and saying, I can ask somebody that, now's the time. We're also going to be joined by 2 of our main real estate attorneys, Kelly Fogarty and Mike Mazik, who will also be there to kind of answer some of the more transactional questions and things they're seeing in the housing market. It has been a very busy week, and I anticipate that they will have lots to say and share. So with that, we're coming up on 7:20. We're actually running a little bit ahead on our schedule tonight. So I'm going to bring Justin Lopatin from Guaranteed Rate in. Justin, are you ready? Thumbs up if you are. Perfect. Okay, good. He's in our virtual green room. See, we're fancy, you guys. Just don't get too excited. I'm going to bring him in right here. And look at that. And let him introduce himself while I type some things in our comments for people.
Okay, thanks, Scott. Pleasure to be here. Thanks for having me. Hi, everyone. So Justin Lopatin, I'm with Guaranteed Rate. Can you hear me?
I can hear you fine. Yeah.
Okay, you were making a funny face. I see you're typing.
Oh no, that's just because I was. Forget about it. I'm trying to type and listen. I'm doing all the things.
I know,
right now.
I know. Just making sure. So it's nice to be here. So I'm with Guaranteed Rate. I've been in the business for 15 years. Guaranteed Rate's one of the largest lenders in the country, largest lender in Illinois. We bring a lot of different tools and strategies to the table. We're known for speed. We're known for reliability. And so that's kind of what I want to touch on today. So you let me know when you're ready for me to give you my tips.
I am so well. How long have you been in the mortgage game, by the way?
So I've been in the mortgage business since early 2006, so 15 years.
All right, geez, is it that long already? My God,
it's a long time. Yeah,
I can't even. I just can't. Hold on. There we go. Let me get back to my screen. All right, hit us with some of your favorite tips.
Yep. So a couple tips and strategies. So Ron made a great point. Know your numbers. Be prepared. Oftentimes people are hesitant to get pre-approval, in advance because they're nervous about a credit inquiry. They may not want to kind of weigh in on the financial scale. They're thinking it's going to expire. And what happens? You're sitting up, on a Saturday afternoon. It's raining. You're on Redfin. You're on Zillow. You see the home you love. You want to make an offer, right? As we know, for every great home, there might be 5, 7, 10 buyers that are in the market. So know your numbers. Know what you qualify for. Know your cash to close. Have the education, so when you see a property you like, you can confidently act with speed, so you can put forth a competitive offer along with your guidance. So I think that's first and foremost. A pre-approval is free, it's transparent, it's educational, and if you're 3, 6, 9 months in advance, it doesn't matter. Sometimes people will get pre-approved 6 months in advance just to make sure there's no blind spots, just to make sure we can maybe tweak the credit, help them understand their savings, and ultimately to be prepared so you can confidently make that decision when the time comes. So I think that goes without saying. Number 2 is, Guaranteed Rate rolled out a really unique feature called an Approval Express. So what we're doing is we're doing a full underwriting loan commitment prior to going under contract. So instead of a pre-approval where it's kind of just a cursory review of your income, credit, savings, we tell you you're good to go. If there's 7 buyers making an offer on a property, you have to have a competitive advantage. If everyone's willing to pay full price, how do you differentiate? So our Approval Express program essentially allows us to do a full underwrite. We review your income, credit, assets, signed off by an underwriter. So when you make an offer, you are approved. All we need to do is an appraisal, and we can close within 2 weeks. So most sellers that are selling their home want to close to go buy their new home. Speed is important. So if you can confidently make an offer with a loan that's approved and differentiate yourself with something that's, maybe intangible, that would make you more appealing to a seller who wants to close quickly, get their money, move on to the next property. So I think knowing your numbers, being educated, I think having a different strategy, and I think, not to say there's pros and cons to every lender, right? There's a lot of things we do well. There's certain things we don't do well. But I think one of the things that we do well and that we bring to the table is just a local credibility with a lot of the real estate companies across town. And so, on an evening or a weekend when our buyers are making offers, we're going to pick up the phone and call the listing agent. Hey Jackie, the Scott Curcio offer for the Johnsons. I just want to let you know that their income's in. We reviewed their credit. We have their down payment. We can close quickly. We'll update you every week. We can get this done for you. And what else is important for you and your seller? So I think going above and beyond to inject some confidence into the agents and let them know we've done our homework will help maybe tip the scale in our favor when everyone's willing to pay full price.
So, sorry, it's late. Yawning. Something I heard was speed being important. And well, so you mentioned before too, I'm going to say it, go back about people like, kind of last minute calling. How often would you say you get that call on Saturday late afternoon, Sunday afternoon from someone going, I just saw this place, I got to get pre-approved now. Fire drill.
Very often. I would say 3 to 5 of those calls Saturday and Sunday each.
Wow.
And it's funny because I get the call, hey Justin, I'm so sorry to bother you. And I tell people, listen, I'm not a 9 to 5 banker. I'm not, my chair's not spinning at 5:01. So when you're working as a realtor, I'm working. I'm on call. I'm like a financial doctor on call. The beauty of Guaranteed Rate's platform is that we can have someone do a pre-approval through an application on their phone. I send them an email, they click on it, they fill it out within 15 to 20 minutes, assuming they're W-2, not self-employed, assuming they're W-2 and more or less have a straightforward situation. we can accurately send a pre-approval letter over in minutes. But yeah, it happens quite a bit. You know, again, right? People see something they like, they're not prepared. But the beauty of technology is that we can turn it around pretty quickly.
Mm-hmm.
And so that's something that we also bring to the table.
Okay, so you hit on a topic that we probably should hit tonight: self-employed buyers.
Yes.
And what are some of the challenges you've been seeing? One of the things I've been hearing this year is that IRS transcripts, which are usually required for self-employed borrowers, are taking a lot longer. Are you seeing that, or what are some of the challenges you're seeing with someone that maybe runs their own business or such?
Yeah, I mean, listen, the name of the game when you're self-employed is to make as much money as you can and then pay taxes on a fraction of that. So you know, strategic accounting optimization.
Yeah.
That being said, the self-employed guidelines have changed quite a bit because statistically, over 50% of self-employed buyers, whether you own a business, you're 1099, you're a realtor, you're whatever vertical of self-employed you are, more than 50% of folks had a down year in 2020. So Fannie Freddie tightened up their guidelines because, think if you own a bar or restaurant, you're some type of a contracted vendor, you're a photographer, whatever it was, things shut down for 3 to 5 months. So Fannie said, hey, if your income has gone down last year, you can't get a loan. So what we have to do now is we have to take a 24-month average from 2019 and 2020, and we need to make sure that your 2020 income did not decline compared to 2019. If your 2020 income declined, most of the time, you're not going to be eligible for a loan approval.
Now, let me ask you one quick question on that. Is that the gross or is that your net?
Your taxable income, not your gross. The gross means nothing from the lender, because if you don't pay Uncle Sam, who's the government, Fannie Mae, who's the government, says, sorry, that income doesn't count.
Got it. So, where I was going with that is people that maybe are self-employed, thinking about filing their tax returns, if their gross income was down a little bit, how do you balance that? Maybe you're going to write off a little bit of less to make your net income on par or a little bit higher.
Yeah.
Right?
So this is where being ahead of the curve is even more important, because you need to be strategic. When you're thinking of buying a home as a self-employed buyer, you need to know that, it's checks and balances. You can't deduct and write off all of your expenses and zero down your income, because it'll diminish your buying power. So you have to be strategic. You have to talk to your accountant. You have to prepare with your lender, and you have to reverse engineer what you need to make in order to qualify. So for example, if someone wants to have a $3,000 mortgage and we need their debt to income ratios to be at 33% or under, we know that their income needs to be about 10 grand a month. So we need to figure out, how can we make sure that you're showing 120K, 10 grand a month times 12 of income. And so we're not beating the system, so to speak, but we're coaching and providing consultation, so the accountant and the potential buyer can put those puzzle pieces together and not have a surprise and go, hey, my CPA wrote down all my income, now what? You have to kind of play the game, be strategic.
That's a really good point. If anyone is watching this later or watching live now and you're a self-employed borrower, you have to be very well coached and prepared on how you're filing. Maybe you're gonna not whittle down that income this year as much. Maybe you're gonna not write off everything, which means you're gonna pay more taxes. But if it's the difference between you getting the loan or not, have to be ready. So
and the last thing I'll tell you, Scott, and in the last 30 seconds is, a lot of the questions I get are with regard to rates, or with regard to the market's going up. Home prices are appreciating on average 10% over the last 2 years. So homes could be 10 to 20% more expensive today than they were in 2019. And a lot of people are thinking there's going to be a correction, there's going to be a drop in prices. And I think that could be farther from the truth, because the quality of loans is very high. The default percentage on loans is very low. So high quality homeowners are getting loans and they're not defaulting. If you're not going to default and there's not going to be a short sale, the prices aren't going to drop. And in fact, when multiple people are bidding on property prices, the prices are going up. So if we see prices go up and we see interest rates go up in the next 12 to 24 months, it's more likely home prices and rates are are higher, which means what you could have purchased today is going to cost you more in 12 to 24 months. So for those thinking and waiting for a deal, I get a lot of people that are like, oh, we're going to see a deal like we saw 10 years ago when the market crashed. The government is not going to let the market crash, because housing is a major factor of our economic recovery, and it's booming right now. And they're not going to kick people out of their homes. People are getting a 12-month forbearance if you had an impact due to the pandemic. So if people are going to get a forbearance with no penalty, their homes are not going to be sold at a discount, which means there's going to be no deals, and people are just going to keep outbidding one another. So if you're in the market now and you're waiting on a deal in the next 6 to 12 months, our prediction is that that's very, very unlikely. And in fact, it's probably the opposite. Homes will probably be 10% more expensive over the next 12 to 24 months.
I'm writing that down.
The demand for homeownership is at a universal high because of how many more young families are getting into the market without a home to give the market. When you're coming to buy a home and you have no home to give back to the market, the demand is going to far exceed the supply. There's only one way for prices to go, and it's up.
Well, and that's why we're seeing a lot of speed. We were talking a big topic last night when we were talking about, how to get offers, is to really have the conversation about what is the seller's time frame, and can you offer them like a rent back if they need? A lot of sellers, I think, don't know to ask that, and we're seeing that a lot because a lot of our sellers are, and that's a reason a lot of sellers, I think, are holding back from putting their homes in the market. They're going, where am I going? And there's that, they know, okay, my house is going to sell fast. Then what happens, right? Do I get a buyer that could maybe give me a 30-day close, but then give me a 45-day possession, and that
being creative and being strategic is, and that's why you're one of the best in the business, is because you ask the questions. It's not just price. What do you need? What's your timeline? What's important for you? How can we cater to the clients how can we cater to the sellers, along with making sure that, you have full confidence in our offer? And that's why the best of the best, get deals done.
Well, and I think it's just, again, it's asking those questions, and it's the same here, like ask as a borrower, asking your lender those questions. I mean, you guys know, you and Ron and Kyle, who will join us later, know the right questions to ask to draw that out, and Ron, who was with us before, made a good point. He's like a pre-approval, a consultation is not an interrogation, but on the same token, you guys as the lenders need to know what you're dealing with, right? Like you need to know it up front. Like we always like to tell our sellers, like, we're going to do all this work up front because we want it to be smooth sailing down the line. So we got to do it now. It's the same thing, right? Like figuring out what's the scoop with your, we want
to make sure people can comfortably afford their payments so they can act with confidence. Just because you can afford something doesn't mean it's comfortable. So my biggest goal is to make sure that my home buyers and my realtors are aligned so that their price range is correlated to their monthly payment goal. If you have a monthly payment goal of $2,000, you should be looking at $600,000 homes. Yeah. I don't want you taking someone in a car and driving them around only to find out that it's too expensive. So the preparation up front helps us be efficient, and that price range, budget, and monthly payment goal align so you can act confidently and get a quick offer in.
Yeah. So we talked, what are your take on where you see rates going as the year? I mean, obviously you talked about, home prices are going to keep going up. What do you see rates doing by the end of the year?
Yeah, so the Fed actually had a meeting today for those that follow the economic news, and they essentially said they're going to keep rates at the same level they are, but that's the rate at which the government lends money to banks, and banks that lend money to consumers. Generally speaking, I expect rates to remain in the mid threes, maybe upper threes through the end of the year. Yeah. But ultimately, the correlation is as the economy recovers, right? Unemployment's going down, people are going back to work, most folks are getting vaccinated. As the economy recovers, the cost of money goes up. When the economy is on a decline, the cost of money goes down to catalyze spending and to help people with affordability. So pending something unforeseen, we're on the right trajectory for economic growth, which means slowly but surely we'll see rates start to creep back up. But that's healthy. That's what should happen. So I think in the next 12 months, at some point in 2022, we'll probably see rates creep into the fours, but I think for the rest of the year, they'll be in the threes, because I don't think the government wants to really hinder the home buyer demand, because it's really creating a lot of revenue for the country with real estate taxes, commissions, and all the different pieces of the assembly line that are involved in our industry.
No, it makes a lot of sense. So cool. Well, thanks so much. This has been really great. Really great content from everybody so far. Anything else you want to add before I send you back to the virtual green room?
No, I don't want to be repetitive, but I think the time is now. I think there are no deals to be had. I think you need to be prepared, know your numbers, and just get that education so you can act confidently. And there's so much misinformation online, and it's impossible to find things accurately because it's circumstantial in different cities and states. So if you go online and Google closing costs, you're not going to get accurate information. So trust your professionals, get synced up with the right people, and just know that it's important to be prepared.
Yeah, awesome. Thank you so much, Justin Lapotin from Guaranteed Rate.
Thanks, Scott.
See you later.
See you soon, buddy. Bye, guys.
Bye. All right, more great content there. Sorry, I'm just realizing my laptop is a little it's a little off center. Let's fix that. There we go, y'all. Great content so far tonight. If you have recently joined us or you're just tuning in, I'm Scott Curcio from Baird & Warner Real Estate, and tonight is night 2 of Home Buying Week. We're doing a special program. We're having a lot of the same questions from a lot of our clients and prospective buyers, and our team was hearing a lot of misinformation in some cases from some people, and then not so much from others. So we were really trying to get out there and say, hey, how can we bring some really good information and bring all the partners that we work with to really just give you all of the tips and tricks. It's been a real competitive spring market, I think, for a lot of people, and us included. We have to, we walk alongside our clients. So for every client that is, struggling with finding a house in this crazy market, we are, kind of like, we're right alongside with them. So now imagine doing that times 2, times 5, times 10. It adds up. So we wanted to consolidate a lot of this information here. So we've already heard from Ron Haddad from Key Mortgage, and then Justin Lapotin from Guaranteed Rate, who just joined us. And I'll summarize some of the points. I'm trying to put in some comments in here as we go while still paying attention. So if all of a sudden I have a weird look on my face, it's probably because that's what I'm doing, typing as we bring people on. But we've definitely had predictions about where we see rates going as the year, thinking somewhere around maybe the mid to upper 3s, even as high as 4 by the time the end of the year. We'll see what Kyle thinks in a little bit. Also, I thought that, in the next 12 to 24 months, we are going to see homes get, anywhere from 10 to 12% more expensive because a lot of these people that are buying, they're not bringing a house to the market, as Justin so eloquently said. So our inventory is just down. So if you've got 5 people that don't want the same house and only 1 sells, that's 4 more that are still looking. And then if you get another one that comes in, it might be 5, it might be 6. So we're seeing that happen again, which is why you want to be a prepared buyer. You want to have your financing set. You want to have your program ready to go so you can just dive right into the pool. And lastly, the other point that Justin brought up that I wholeheartedly agree with is there are no deals to be had right now. And that's a question I've had from people. It's like, when can I get a deal? The answer is probably not for a couple of years. If a deal to you means you want to pay 5 to 10% below the retail market, those are just not, that doesn't exist right now. And realistically, I don't know when it will. If you want to know when the best time to get a deal was, it was 10 years ago in 2011. That was when the market was at the absolute bottom. So we can't go back. We can only go forward. So with that, we're going to bring on our third and final guest of the evening, another one of our top lenders, Kyle Swieger with PNC. I am going to invite him. Kyle, I'm bringing you in right now. But bam, look at that. It works. Technology is exciting. I'll let you introduce yourself, and then I know you've got a couple of points that you're going to go through, including specialized homebuyer programs and down payments and credit scores. So, take it away.
Thanks, Scott, for having me on. My name is Kyle Swieger. I'm with PNC Mortgage. I've been a loan officer now for 9 years, all at PNC. And I work with Scott and his team and several other realtors in the city. And we're here to help make the process easy for you as possible. So anything we can do to help, we're here to help you guys out.
Awesome. So one of the things we were going to talk about, sorry, I had to have a chip, you guys. I'm so sorry.
Good looking chip.
Very, very professional over here. There you go. We were talking about like home buyer programs. I know you always have a lot of good resources for people that are maybe thinking, okay, can I get a little bit better deal if I buy over here, or maybe, income qualifications, programs like IDA. So maybe talk a little bit about that, maybe some things that people might not know to look or ask for.
I tell you, there's programs everywhere. You just got to know where to look for them. When that's IDA, we have our own program at PNC. We're giving a $5,000 grant right now. What I always tell buyers, though, is they've always talked to somebody else, one of their friends, and they want to know where the free money is at because they are strictly a first-time buyer. Those programs, I don't see those programs anymore. There's no programs out there that says, hey, we're going to give you some free money because your only qualification is you're a first-time buyer. The qualifications now mainly are based on your income. That's number one. They want to know how much you're making. To be honest, the less you make, the more they're going to give you. And two, the location of the property. That's how they're revitalizing certain communities. We're going to give you a bunch of money to buy in maybe underdeveloped areas to help stimulate that area. But I tell you, some of these areas are, uptown, the Target right over by Division where Cabrini Green used to be. These are areas and pockets in the city where we'll give you $5,000 for free just to buy in these areas, and we'll give you a rate discount. So we'll do all those things to help you buy. The biggest thing, though, is, to be honest, we don't do a lot of IDA loans because when I'm talking to buyers, they bring up IDA. My advice to them is always the same.
And can you tell, some people may not know what IDA is. Can you just explain what that is and what it stands for?
The Illinois Housing Development Authority. So it's basically a program to help people achieve home ownership. The problem I run into with it is making sure that the people are educated in terms of what are you getting? Did you read the fine print? Because a lot of the programs, you have to own the home for a period of time, or you could a silent second mortgage on the back end. It has to be your primary residence for X amount of years. Especially with IDA, we've been talking about rates with Ron and Justin. Sorry, you're not negotiating rates with IDA. IDA is going to tell you this is what your rate is, and you can enjoy that rate. So, it's going back to piggyback on what Ron and Justin said. Just because the money's out there, is that the right program for you? You just want to make sure that you've done your research, and it always is in the fine print.
Good point. Good point. All right. What are some other tips? I know you're also talking about credit scores and credit repair and kind of.
I would have credit. And just to piggyback on what those guys said earlier, for me, when I'm talking to a first-time buyer, as soon as the light bulb goes off in your head, I think I want to buy a home. That's when you get pre-approved. 3 months ahead of time, 6 months ahead of time, 12 months ahead of time. It doesn't matter because I need to, just as Ron and Justin said, we need to be able to evaluate your profile. I cannot help you get the best rate if you are getting approved and then getting pre-approved on a Thursday and moving a contract on a Sunday. I can't. It's too late for me to help you with your credit score at that point. So ideally, I would love to have 4 to 5 to 6 months. Some of the biggest things I'm seeing is, one, get a professional to run your credit through the pre-approval process. Don't rely on your Chase app or your Discover app that might be only pulling from TransUnion as an example. The problem is, some of these apps will pull from one specific FICO agency. The problem is, as a lender, we're pulling from all three, and we're using that middle score. So TransUnion is telling you got a 760, but I'm over here using Equifax, which has you at a 720. And now you're wondering, well, why aren't I getting a better rate? The biggest things as well that I see is there's a big distinction right now between Vantage scores and FICO scores. A lot of those, your Discover card, things of that nature, they're using a Vantage score, which is not an apples to apples comparison for a true FICO score, which is what, as a lender, we're using. And then the biggest thing, too, is just making sure that, again, a professional is running your credit, because if I've seen it once, I've seen it 100 times. You're talking to a first-time buyer. They tell you they have an 800 credit score. You run their credit, and they forgot about that AT&T bill in college that went to collection $50, and you forgot about it. So the two big things I'm looking at when I'm looking at credit: one, judgments, liens, and collections. That's number one. We got to clean up any derogatory credit you have. Two, revolving utilization. This is making sure you're cleaning up your credit cards. And I've seen it with your $100,000 buyers. I've seen it with your $5 million buyers. Credit utilization is, if you have a credit card that has a $10,000 limit, ideally the balance is not going over $3,500 to $4,000, 35 to 40% of that utilization. And really what you want to monitor is, when is your credit cutoff for that specific credit card? Not every credit card is the 1st through the 30th. It could be the 15th through the 15th. So you want to make sure that is in line. And I see that all the time, where I'm doing everything right. I pay all my bills on time, but you've completely maxed out your credit cards, and it is dragging down your credit, because the credit companies, they want to see responsible use of you using the credit.
Yeah.
So, some of the things we do is if I'm pre-approving a client, and we've done this with several of your clients, and we have enough time, we'll try to help you consolidate your credit cards to clean that stuff up. You will be surprised at what that will do for your credit score in a very positive way. I mean, we've seen 20, 30, 40, 50-point jumps in a matter of 3, 4, 5 months because we're just kind of rearranging some of the different liabilities.
And so on average, if somebody does need to do credit repair to give themselves a better loan program or a better interest rate, would you say that takes about 3 to 4 months kind of on an average? Okay.
Yeah, I think so. Just because you want to get time, one, you have to do it. You have to follow through on what you're going to do. But then, as I mentioned, you have to wait for these credit card companies or whatever the liability is that you're trying to correct. You have to wait for them to report to the agency. So if you just signed up your credit card today being the 28th, but that credit card isn't going to report to the agencies until May 20th, well, we got some time on our hands to wait, and we need to wait. And I always tell, obviously, when the right house comes on the market, it's time to pounce. The longer you can wait, though, the higher that score is going to keep going for you.
Got it. Okay, good. And then one of the things we were talking about before tonight, too, was down payments. Obviously, there's such a wide range of down payments. And I think even today, we see people that go, oh, my God, I need 20% down. I'm like, in what universe are you living? No, you don't. Like, you could do it for 3, you could do it for 5 and such. But you were all even going the other way that possibly if someone's in a really strong position, do they go to 25%, even for a primary occupancy? Do you want to talk a little bit about that?
Yeah, that's, if you have the flexibility to do a bigger down payment, if you are buying a condo, 25% down is going to get you a better interest rate than 20% down.
Yeah.
Typically by 1/8 to 1/4%, somewhere in that range. And the reason for that is just Fannie and Freddie, when they look at that, they say, okay, there's still risk here because even though you have a 20% down payment, there's still risk within this building because if your neighbors all default, pick up a bigger piece of the pie, or the building itself is at more risk to default. So 25% down specifically for a condo purchase will get you a better rate. But I always tell buyers, you don't run from PMI. Don't run from it. If you found the right property and this is what fits you and your family, don't run from PMI. I tackle it head on, and we'll be here to help you kind of manage that and get rid of it when the time comes.
I'm just making notes as we're talking, so forgive my silence. Well, cool. Now, what do you see forthcoming later in the year in terms of interest rates? Like, what are your predictions on where they're going to go?
I've been telling everybody I agree with the Ron and Justin ahead of me. I think they're trending in an upward direction. I think there'll be a slow trend, but I'll piggy on what Justin said as well. When interest rates are going up, typically the economy is doing better. So I think there's this fear that, the interest rates are going up, people might not buy. Well, that probably means the economy is doing well, wages are up, unemployment's down, more people have money to spend and buy. So, people are always going to be buying. And I tell you, the rates are still historically low from where they were when our grandparents and our parents were buying. So now is a great time to still pull the trigger.
Awesome. Well, cool. Anything else you want to add tonight?
No, I think, just making sure you're pre-approved ahead of time, making sure a professional is looking at your credit. And, the thing that I would piggyback on as well is I'm a consumer myself, and you've had 3 really good loan officers on here. I always tell everybody, rate is 1B. 1A is, can you get that? Can I get you to the closing table on time? Because I tell you, if I come back and I say, hey, Scott, by the way, we're not closing that loan on time, it's going to be an extra 3 weeks. You're not going to say to me, well, don't worry about it, Kyle. Remember that great rate you got me? I didn't really care about the closing date. I just wanted that great rate. That's not a conversation you and I are having. So 1A is, can you assemble the right team to get you to the closing table efficiently, quickly, and on time? 1B is still, I'm a consumer myself, rates are very important.
Yeah. All right. Well, great. Ooh, so much good content tonight. My head's spinning. I have so many notes. Now I've got to figure out how to put that in the comments. So thank you guys so much. Kyle, I'm going to
Thanks for having us.
The green room. Appreciate it. So hold on. Let me do this. How do we do? There we go. Thanks to Kyle Swigger from PNC. I'm actually going to just put their names in here. into the chat room right now. I'm going to try and remember everybody's email. Here we go. Let's see if I can do that. Hang on one sec, all you folks, all you lovely folks watching at home as I try and get this right. And Ron is the one that I always screw up. So let's hope that I do not screw this up. He's going to kill me if I do. Hold on, Ron, I'm going to bring you on for one quick more second so you can give me your right email, because I know Kyle's, I know Justin's, I'm going to screw it up and I can't go search it right now. So I'm going to bring you onto the stream so you can give it to me correct, because I always, it's your first name dot last name at, is it My Key Mortgage?
That's right. Yeah, it's Ron, period, Haddad, at mykeymortgage.com.
Great, thank you. And you see, everyone's still here, so I'm going to send you back now and go back to my little wrap up. Thanks for helping with that.
Thanks a lot.
Bye. Okay, sorry, I really had to do that there, because if I didn't, I was going to screw this up. But I'm posting all of our guests in there, so if you need mortgage help, please reach out to them. They're all really great, been in the business for a while, know all their stuff, as we saw tonight. And so just to, as we have some final time here to recap we've gone on, I really want to thank all three of my guests: Kyle Swieger from PNC, Justin LaPotin from Guaranteed Rate, and Ron Haddad from Key Mortgage, whose last name I always screw up. It's just going to be that way my whole life. It's like the word inquiry. I can never say it without screwing it up. So there you go, a little peek behind my curtain for everyone there. So thanks to everybody that's been tuning in, kind of in and out throughout the night. This is our second of 4 events for Home Buying Week. The next one is tomorrow night. We're going to be talking specifically about vacation homes and second homes. And I'm really excited about that because I think there's so much opportunity, and we've seen so many people asking questions about that. Tomorrow night, I hope we have a really good time. So please tune back in for that. Even if buying a second home is something you're like, I haven't really thought about that before, come to this, because you might start thinking about it, or you might think, oh, let me buy my retirement second home now, or what have you. Anyway, so that's tomorrow night. Saturday is our Q&A session, which is at 10 a.m. Tomorrow night is, again, 7 o'clock, right back here on Facebook, Instagram, and YouTube Live. Wrapping up some of the most key points, let's summarize. Tonight was 5 ways to get the best loan. If I was summarizing that for everybody, 1 is get pre-approved now, be early. The minute we've heard from everybody tonight that when you start thinking about buying a house, that's when you want to do your pre-approval. And why? Because you want to be ready to bid if you see it. But also, as we heard a lot from Kyle, if you've got some issues with your credit where it's not just quite where it could be to really get you the best rate, it's going to take 3 to 4 months to fix that. So imagine you're thinking about buying 6 months from now. Right now is when you should be talking to one of these folks about getting yourself pre-approved, because if they see something on your credit that could make it better, you have the time to do it, right? So that's one. Having your consultation with your loan officer and knowing the programs available to you and making sure that they're comfortable for you. A great quote from Justin earlier: just because you can afford something does not mean it will be comfortable for you. So you want to be aligned on that. If you could buy a $600,000 house, but you're really comfortable at $450,000, then you need to be looking at $450,000. No reason looking at the $600. It's like, don't look at the chocolate cake if you're on a diet, or do and just eat it. Whatever. I mean, that's what I would do, but that's a whole different topic and segment. A reminder too, next week, we're going to have Home Seller Week. More on that coming to our social media channels. So be mindful of that, a whole thing for home sellers. What else? Self-employed, another tip from tonight: self-employed borrowers, make sure you're consulting with your loan officer and your accountant about filing your taxes to make sure that you're going to be able to put the numbers forth and maybe take some fewer deductions to achieve the income number that you need. What else was on here for tonight? We also went over, make sure to look into whether you might qualify for a specialized homebuyer program, which are normally based on your income level. Usually you make less money, you get more if you can qualify. And then also looking at location. Sometimes location grants to help revitalize areas are available, but there's not a good clearinghouse for that. So you got to ask your loan officer and say, hey, here's what I'm looking to buy. Here's what my income is. Do I qualify for any of these programs? So I went through that. And also, what else? I think that was it. That was our main tips there. So there we go. It is 7:54. We're going to wrap up. Thank you to everybody that was a guest tonight. Thank you to everybody, all you friends at home that tuned in. If you need a little bit more direction, send me a message through one of our social media channels or a direct email, and we'll look forward to seeing you out in the field and hopefully helping you with your home buying journey if you're in the mood and the spirit to start jumping in the pool. So have a great night. Thank you guys, everybody, for tuning in. We're going to end the broadcast now, signing off, and hopefully we'll see you back tomorrow night for our vacation and second home market discussion. Have a good night. Bye. Thanks for joining us.